So welcome to Game Plan Sunday. Today's July 19, 2020. We're going to take a look at the markets, what occurred over the past week, what we noticed coming down the pipeline, how can we use that information to strategize and to make some money in the markets. So before we get everything kicked off, I do want you guys to be aware of our course, our classes, our platform here, Wallstreet Jackboyz, and the options master course right here. You guys can see that. People ask, what am I getting with this? You have streamlined coursework, all right, quizzes, certifications, the whole nine. All right, so you just go to wallstreetjackboyz.com and you will get that. What I want to do here is actually kick off our session with the news feed, because there's so much, so many things that we've added. I'm not too sure if people are acquainted or understand how to use our website. So our website, Wallstreet Jackboyz, is pretty awesome. Nothing like you've ever seen in your life. It's pretty much like, imagine if you were actually on Facebook and you got your education on Facebook. So say if you're getting your courses, your training, and you're having your social atmosphere and all of that all together. Well, that's pretty much what like Wallstreet Jackboyz is. So you get your education, your social, everything all in one platform. So anyhow, one of the things that I like to do is, again, as soon as I get here, I'm going to the news feed. So on the side panel, you guys can just click there to get to the news panel, to the news feed. Always posting juicy stories in here, and you guys can post on your own timelines and everything, and we can catch it in the news feed. So we're going to go to the news feed. So again, when you're not learning, you can still be learning about, events that's taking place in the economy and the financial markets and things like that. So we'll take a look here at, what occurred over the past week. We can quickly see this. It's things that we've been actually posting on the website. And then make sure that you guys also check out the chat room. When you go to the website, you see a little chat bubble right here. You just click on that and you'll enter into the chat room. OK, so we're in there every day, all day. Shout out to everybody who's been in there working it. I know Jonathan has been in there. Mark has been in there. Ron is in there. Dustin's in there. A couple of you guys who's not here right now. But for you guys that's up right now, I want to give y'all a huge shout out because, y'all are working it. We're working it together. Lots of money plays out there throughout the day. And most platforms charge about at least $200 a month for this type of service. And just for being a member here, you guys got access to that for free. So definitely make sure you take a look at that. I think that the markets overall were actually pretty good, pretty decent last week. For me, what I was more concerned with was basically, how my investments in gold and silver was doing. And we had a phenomenal week in gold and silver. Equities also did pretty decent. And we'll touch that here in a second. But I'm seeing outflows coming out of the NASDAQ, basically going into other sectors. So we'll talk about that here in a second. But if you just scroll down the news feed, you can see things that we were actually talking about here. We had the banks that actually, you go down here, the banks actually did their thing with their earnings. So that we had, the earnings. Let me actually all right. So give us a little more real estate. Just click that button there to drop that panel. So banks actually did their earnings, and they actually did pretty good. But what we learned from the earnings of these banks, except for Wells Fargo, who got wrecked, everybody else did pretty good. But what we learned is that they are preparing for massive amounts of defaults that haven't even occurred yet. So they have money on the sideline, but they got this, to take care of these defaults, these wave of defaults that's coming. This is right here on the website, so you guys can catch all the juice right here. Trump signs Hong Kong sanctions bills, U.S. and Chinese business again. That, again, itself is, hostile towards, China. And we'll talk about that as well. We had Granddaddy Dalio, who came out with some more framework, another chapter in his book. And he's talking about those things with the way that we're moving. He said that, basically before it gets to shooting, it always starts with an economic war right now. He goes in and starts describing some of those things. So we'll take a look at that. There's some earnings posts here. Goldman Sachs smashed earnings, which was great. So, Bank of America, we have, all these different things that are posted here. Interesting thing here is this snippet here. I got this one from Ray Dalio's little topic here. I want to cover it real quick, actually, because I want you guys to really understand what is going on. OK, so this is something that's interesting. So this is just a snippet from, it's a long ass article. If you're into that type of stuff, you could do it. We have it posted here. But basically what he was saying is he said the economic war started about 10 years before the hot wars. Hot wars meaning, shooting, like physical, military stuff. Talking about the Great Depression in the first one. But then let's just skip to this sentence here. It says in 1929, gold and to a lesser extent silver. See, gold and silver was money. Okay. We got that article right here. If you haven't read it, make sure you read it. Gold is real money. I've been putting you guys on that. So anyway, you hear the genius himself tell you that gold is money. And paper money represented a promise to deliver it. In the roaring 20s, a lot of debt was created to buy speculative assets, stocks in particular. That's what everybody's doing right now. All this debt created, and they're buying stocks with it, okay? When the Federal Reserve tightened monetary policy in 1929 to curtail speculation, so they wanted to stop all of that, they end up popping the bubble. So that's what caused the Great Depression. The debt problems in the U.S. were ruinous for American banks, which curtailed their lending around the world, hurting international borrowers. At the same time, the Depression created weak demand, which led to the collapse in U.S. imports and other countries' sales to the U.S. As their incomes weakened, their demand fell and more credit problems occurred and a self-reinforcing downward economic spiral. At the same time, the U.S. turned protectionist. This is what's important here. But let me just switch this over to red real quick. All right, he said that the U.S. turned protectionist. I know you guys probably don't understand what that is. We'll cover it. U.S. turned to protectionist to safeguard jobs, so it raised tariffs through the Smoot-Hawley Tariff Act in 1930, which further depressed economic conditions in other countries. All right, so then this last bulletin point here, he says turning protectionist and raising tariffs to protect domestic businesses and jobs during periods of economic bad times is common. All right, so what he's saying is this happens all the time throughout history, okay? This guy studied over 500 years. He's traded through over 500 years of data. His team of geniuses basically recreated all these worlds, and he studied, the social aspects, the economic aspects, all these things, and he has this framework, and he's basically telling you that this is nothing new. This happens all the time, so that's why it's easily able to predict these things. It leads to reduced efficiency because production does not occur where it can be done most efficiently. And it typically contributes to a greater global economic weakness, as raising tariffs usually lead to tariff wars that typically cause the country that raised tariffs to lose exports too. It does, however, benefit those entities protected by the tariffs and can create political support for the leader who is imposing the tariffs. I think this is very interesting that he pointed this out. As I study economics here, one of the things that we learn about economics is I think it's the Ricardian law, but it's about efficiency basically. To make it simple, is basically if you have it's basically, let me see here. Let me just get this pen together. All right, we're going to draw over this a little bit. So basically, if you have two entities, one here, and they have a task. So basically, trying to make this simple, okay, in an illustration, this here is let's say a restaurant owner, okay, and this is a restaurant worker. This restaurant owner here is basically trying to grow their business, so they hire some help, okay, and this one here will be the help. Let's make it number 2, all right. So this is a young person, no experience, no skills, or nothing like that. And person number 1 is the business owner. They got the expertise and everything, but they're limited, and they're cooking the food. They're, serving the drinks, running the cash register, all of that. Okay. So they need some help because it's growing, and they hire this person to help them. So this person is helping cooking. They're helping to run the cash register, run the drinks and things like that. So what they end up discovering, I'm going to just try to simplify this, make it short as possible, so you guys can understand what's going on, how we got to where we are today, is basically what they discovered is that the person here with all the wisdom, person number 1, they're better at the cooking and all of that, but they're slow when it comes to serving the drinks and running the cash register. But this person here, the person they hired, the little kid out of high school, they don't have any wisdom with cooking and things like that. They probably burn the whole kitchen down. So they're slowing that process down, but they're fast physically, so they can get those drinks fixed fast. They can run the cash. They're good with math or what have you, so they can run that better. So they'll take these 2 items here that he's better at. They'll take this one item that this person is better at, and you make this person here only do that one thing that they're good at. And then you have this person stop doing the thing that they're not good at and only focus on the thing that they're good at. And what they basically, through this economic principle here, is that the business itself becomes more efficient. Okay, the food gets done better quality because that one person focused on it, and they can put out more food faster. And the person over here, they can put out what they put out much faster. And so when all these things are coming together, it can create this efficiency where the good itself, I'm gonna just put a G for good, the good itself, they can have more of the good. They can actually get the prices down better and everything like that. And so it gives the overall better benefit to consumers. So all the consumers, they get the benefit from this efficiency here. So this is basically what happened with trade. So you have with trade, the same kind of situation. You have the US, you got China, okay. US, we basically got rid of our manufacturing. We sent all of that over to China, and China actually does all of that. They sell it back over to US. And so basically you have a lot of US companies like Apple who actually have their phones and everything made in China because China is much better at it. They can do it much better and faster. And so then after they make it in China, they turn it back around and sell it to the US. Okay. So this, provides the whole society with a better benefit. Okay. All right. So what Ray Dalio is basically saying during these protectionist times that he studied is that behavior shift, it changes. Okay. Because of the economic chaos that's going on right now and in the political atmosphere, everybody shifts into more protectionist because we need to get more jobs back to the US, blah, 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 right? So, the whole make America great again. What people don't understand is that America used to be the manufacturing powerhouse. And this is the reason why we have this privilege of having the world reserve currency, because all the goods, most of the goods were made here in America. And so most countries, they got their goods from America. So it was like, hey, it's a no brainer. We might as well just, do trade in the US dollar. Since we're getting our goods, we got to, buy it, exchange our currencies for their goods anyway. So it was a no brainer in those times. And so that world reserve currency has given us a privilege. Okay. We all have this privilege of the world reserve currency. And this world reserve currency situation, basically, a country, according to these Keynesian economists, is that you can't go broke if you have the world reserve currency because you can just print it up. All right. And all the debts is denominated in here and everything. So we have the privilege. But China wants that, and they're coming for it. OK, and this is what's happening. So China's coming for that. China is actually, they bought a lot of gold. So we already knew. That's why we've been pushing gold for so long, because we already had the buyers in there. They're pushing a lot of gold. They bought a lot of gold because they're launching a digital currency. I believe they already launched it, actually. So but they're launching this digital currency that's going to be backed by gold. OK, and the US dollar is backed by nothing. And so the dollar, that's why I keep on saying that we have to watch the dollar and watch how it's behaving here, because it has correlating impacts in the markets as well. But understand, this is the general theme. This is what the real game, the real war that's being played, is that China, they want that privilege that we have. And America is actually putting up a lot of resistance. And China is really, really efficient. Okay, I just saw something. I don't know if you guys saw the new Ford Bronco. It's a really dope car, right? And I just posted on my Facebook page that this Chinese company already has a version of the new Bronco. It's like, what? They just dropped it this week. China is nothing to be played with. Like, they really specialize in this manufacturing thing, right? And so they can get it done. They can recreate pretty much everything. So this is one of the situations what make America great again. So about intellectual property rights and with China. But, pretty much so far, the trade deal is off the table, right? And we have tariffs that's going against China. This is all hostile things, okay? These same things happen with Japan. For you guys who don't know the history, what caused the Pearl Harbor, they don't tell about it in movies and stuff like that. But we were basically hostile towards Japan because we helped the allies. Japan was going through famine and a lot of other things. They started invading China, and they started basically trying to get the resources to feed their people. And they started, oppressing China. So if you watch like the old Ip Man movies and stuff, you can understand this is what was happening. Because of the lack of resources, they started invading China, trying to get those resources. In America, we had special interest in China and Russia, so to protect that. And so we started to lend, military equipment and stuff like that to China and Russia. And this was basically viewed as hostile. But what we started doing is we started choking off the economy, Japan's economy, through this, these economic, things like tariffs, and you see all this tariffs he's talking about. So when you hear these things, these are acts of war, but it's, it's through economic means. It's not military. But Ray Dalio's saying that before it gets there, you get the economic wars first. So we basically starved out their economy, put tariffs on them, and we blocked trade with Japan. And Japan, out of desperation, they attacked Pearl Harbor. They didn't even think they can win that war. But you kind of we put them in the corner basically, so they attacked. So that's what happened with that. So what Ray Dalio says that we have in that same kind of situation basically here, that the economic wars is what we're in right now. So we're pretty much already at World War III. It's just not shooting. It's, economic. So it's lots of hostility that's actually going on towards, Chinese companies like Huawei. We talk about that. And so the UK, I know I think we posted this on the website. Let's see, what's this? And what's okay? Yeah, data privacy in the European Union. So we talk about, these tech stocks here. What else do we have? Oh, Netflix we cover. I'm trying to see if we had anything. Maybe I didn't post it, but yeah. So basically, the UK they basically scrapping the whole Huawei, who's ahead of everybody in the game when it comes to 5G technology. We're behind, but UK is asking for Japan to come up with a solution for their Huawei issue. And Mike Pence and Trump, they've been threatening Europe basically since last year about this whole Huawei thing. And it's our way of applying this economic warfare that Ray Dalio's talking about here to choke off, the economy, to stifle them. The problem is that, we can't stop China. We can only slow them down pretty much. And the way that I see it is that it's just the amount of time before it happens. The way that everything is happening right now, this is what all roads lead to. Okay. But the UK, they show, they took sides and they basically are finally coming across with the U.S. to appease the U.S. and they're looking for an alternative way to do it. Now, the problem is that it's going to cost them more money to do so because, again, China, they make all these things cheaper than everybody else. So the reason why I want to talk about this one economic section here, where we talk about turning protectionist. Hey, we got to get these jobs back to Americans. We got to get these jobs back to Americans. And Americans are like, yes, we need these jobs. So overall, you get to make America great again, because, again, we destroyed the middle class by sending these jobs over to China in the first place. And so the whole problem with this situation is that it definitely puts, Trump, if he wins the election, into a very compromising position, because that's what we're actually moving towards. Currently right now is shutting off this trade with China and closing it down and for us to get the manufacturing back in our hands. What is the expense of that? What is the cost of that? So the cost of doing this is, first you have to understand that GDP, okay, GDP itself, the growth, domestic product, GDP, all right, 70% comes from consumer spending. So the economic whiz back in the day, they figured that we can get this GDP to continue to grow as long as we can keep people spending money. So we got to keep spending money. So getting people to spend money. The reason why people have been able to spend so much money, because we've been able to offshore the manufacturing over to China. China's been able to get the prices down low, really, really low. And China has the lowest price out of everybody. So we can spend more money today because most of the things that we have are actually made in China. I got this mug here from my son, for Father's Day. It says, "Dad, you are my hero." Pretty special to me. I have no idea where it was made at, but I'm pretty sure it was made in China. In fact, yep, right here on the bottom of the label here, it's you can't see it, but it says it's made in China. A lot of companies, they say American companies, but they get the stuff made in China. And it makes sense for entrepreneurs to do that because you have higher profit margins, okay, versus you getting something made in America. It's going to cost more. The labor costs more and everything. So your profits, you can't make as much money. So entrepreneurs, actually, most entrepreneurs, if you ever watch Shark Tank, you would know exactly what I'm talking about. You ever seen Kevin O'Leary or Mark Cuban, any of these guys, they turn people down because they say, hey, man, you got to get your price down. Your price of manufacturing. I know somebody else who has a manufacturer, they can get the same thing done for half the price that you're getting it done. And for that reason, I'm out of your deal, right? Let me know if y'all ever watch Shark Tank and you see them talk about that, because everybody wants to do the American thing, but financially it don't even make sense actually. So that's why you have the sharks are like, hey, offshore this crap, right? Like, forget about all that, patriotism stuff. This is business, right? You got to get your profit margins together in order for you to compete, so you can have more capital. So the more capital you have, anyway, it's just this whole business cycle that makes it rewards entrepreneurs to get their stuff done in China in the first place. So the problem with bringing everything back to America, okay, is that the cost of these goods will go up. Okay. And so when the cost of goods go up, we talk about inflation. So it's another way to bring inflation back to America. Okay. All right. So first of all, you got the Feds printing astronomical amounts of money. That's a very big issue. And you also have this whole idea of bringing jobs back to America, which I think that, Americans could benefit from that. But also, you will not benefit from it if the price of things go up, right? I think a lot of jobs can be, here in America, right? A lot of customer service jobs have been offshore to India. A lot of people, I think when Trump was doing his debates the last election, one of the things that he was talking about, he had pulled his phone out and he was saying that, hey, man, when I call for tech support, I'm going to talk to somebody in India who can barely speak English. I would rather talk to somebody who speaks English. So anybody in America can take those jobs and better themselves, right? I would probably rather talk to somebody on the phone than flip burgers or something like that. You know what I'm saying? I mean, you make more money and then you don't have to be all messy. But instead, a lot of those jobs are outsourced to different countries, right? And so it seems like it's the thing that makes sense to bring them back here. But it's a benefit to these entrepreneurs, these business owners, to offshore it to India, where they can pay these people for less than you. They want to pay you $15 an hour when they can pay them maybe $6 an hour over in India because of the currency exchange. Anyhow, so when the entrepreneurs, if they had to do these things back to America, Americans get these jobs, that means that they're going to lose their profit margin because they have to pay higher wages. Inflation would be an issue for them as well. So they don't actually absorb those costs. They pass those costs on to consumers. So you see the price of the goods that you buy increase. So anyway, hate to be all lengthy with you guys, but this is why I want to bring this out that Ray Dalio was calling out. This is a very long segment that he put out, but I just want to share that one portion. But he says it always get to this point before they get to shooting. And he said he never been into a shooting war, but it's definitely like where we're going to be headed to. So I think that's interesting. Dustin said, Boston Pizza, Jim always just does what everyone else does. Right. All right, cool. So I wanted to get that out the way. Netflix, this is another thing. Netflix is interesting. Netflix missed their earnings. Again, this is posted on the website, as well. So you guys could have caught that before the markets open the next day. Basically talking about, the reason why they missed. What else we have? How the Feds created a crisis China is being blamed for. I posted this article on the website. So if you guys are not members, make sure that you become members. And if you haven't been acquainted with the website, with the news feed, make sure you do. It's lots of juicy information here, but you can click on this article and read it. Thought it was interesting because it's China basically talking about, the U.S. companies. One of the things that they talked about is that they said that the tech companies are now the tech Kardashians. I thought this was hilarious. So China was throwing shots at the U.S., and they were talking junk about Elon Musk. They were straight clowning Elon Musk. And they were saying that, you can read this article yourself. It's posted on the website, so check it out. They were basically saying that the Feds is pumping up this whole thing. That's why I said how the Fed created a crisis China is being blamed for. And they said that the Feds is creating this whole situation that's going to be worse. And it's all because of the Feds. They're not being honest. The stock market is not being honest. And they're saying that the intellectuals, if you know anything about, economics, the economics talks a lot about entrepreneurs are vital for an economy, and the intellectuals are very important for social engineering. So you got to have the smart guys that everybody look up to influence everybody. So Elon Musk is one of those people, and in this article, they were saying how people are trying to act like they're Steve Jobs, like they're modest and stuff like that, but really they're not. They're like attention whores. And they were saying that Apple is like the greatest technology that America's ever created, and that nothing else has came close to it. Not yet, not Tesla, not Google, none of these other things is talking about. And it was saying that the stock market is going to be pumped up because, like Elon Musk could say a tweet and people start to rally behind it, although the fundamentals are not there. I thought it was really interesting. So if you guys want to check it out. Because again, a lot of U.S. companies, we make software. We got Silicon Valley. But see, China, you got to get that software into hardware. China specializes in that. And a lot, like I was just describing to you guys, these companies are going to get their things made in China because it just makes sense financially. So Chinese people are making the iPhones and making everything else. But what you don't understand is that in order for you to do business, you have to give up some rights to do business in China. And every entrepreneur is willing to do that just to get that cost down. One of those things is that they have to have oversight from a Chinese company. They got to know your whole operation, your whole business. So these Chinese people is making this stuff. They know how the iPhone is made. And so I was just telling my man on Facebook that what you don't understand is that you can't compete with them. And the whole intellectual property thing is really a waste. It's Trump, he has to influence American companies to come back over, because instead they're going to keep on giving up this information because the Chinese are making it in the first place. So of course they know how to do it, and they can find issues with it and they can make it better. Like the Huawei phones, I believe the cameras are like so much better than iPhone, blah, blah, blah. Their phones are actually supposed to be better than iPhone. Anyway, this is a good perspective from China, and they was talking crap about these tech companies and that they don't have good evaluations, and that the stock market is pumping everything up, which we've already concluded. So that's that. And okay, so Mark posted this. Again, you guys can post on your timeline, know that. Ericsson stock jumped on Friday. This is one of those 5G stocks that we talked about a year ago, what have you. So that was all of that. But again, the theme last week was, banks did their earnings. And the banks, they did pretty good. But that money that they have is because they're projecting massive amounts of default. So that's risk coming that, nobody's priced in. What's coming down the pipeline this week? Okay, Mondays, we got a couple of earnings. It looks pretty light. Cadence Design, Halliburton, IBM. So IBM will be interesting to watch. So I think Monday is going to be pretty light. Earnings on Tuesday, Capital One Financial, Coca-Cola, Intuitive Surgical, Lockheed Martin, Novartis, Philip Morris. See how you smokers are doing out there. Texas Instruments, United Airlines. So Tuesday seems to be like a pretty interesting day. The Senate Banking Committee votes on the nomination of Judy Shelton at the Federal Reserve. Okay, so we got Fed voting. And Wednesday, let's see, we got Chipotle. Chipotle. That's Chipotle. Just kidding with you guys. So Chipotle, that's going to be out. I don't really care about these other names, but Microsoft, Tesla. We finally get to see what Tesla is going to be about. Thermo Fisher. We got some home sales data that's coming out here. The federal housing. Okay, more housing data here. All right, so that's on Wednesday. So Wednesday is another big name with Microsoft, Tesla, and Chipotle. So Tuesday and Wednesday looks like it's going to be pretty big for earnings. Thursday, we got American Airlines. We got AT&T, Danaher, Dow, Equifax, Intel, Kimberly-Clark, Southwest Airlines, Twitter, Union Pacific, okay? And let's see, Conference Board releases their leading economic index. They're normally always optimistic, so I take that with a grain of salt, basically. The Department of Labor reports initial jobless claims for the week ending on July 18. Jobless claims have declined for 15 straight weeks since peaking at 6.9 million in late March, but continue to surpass a million. The thing is, and I don't even have it pulled up here, but the thing is that the jobs are declining, but they're stabling off at a really high rate, okay? And that's a problem because it's still millions of jobs. I think it's 15 million, jobs that, or people filing unemployment, what have you, consistently. So it's still not good. It's terrible. Anyhow, I can't remember the numbers, but it's really bad. So if I show you the chart, you'll see what I'm saying. It's like starting to stable off at a really high place. Friday, American Express, okay, Honeywell, NextEra Energy, Schlumberger, Verizon. Okay. And then we get the PMI numbers. Okay. And that's been rebounding. So it's going to be interesting to see if that continues. And then more home sales data from the Census Bureau. So that's everything that's coming down the pipeline this week. All right. And also, if you guys on the website, when you're at the social media side here, this little magnifying glass, and you can go in there, you can type in things, and you can actually search things across the website. I don't know if you guys ever noticed that was there or not, but you know, again, you can just go in here, you can type in things. Let me see if I can pull this up real quick. Say for instance, I typed in the yield curve, and it's going to pull up all that, you know, whatever information we have on the website in regards to that term that you search, it'll pull up. And this is our yield curve, handy dandy yield curve tool that I manned the data for and built. It's an interactive chart, so you can go in here, change some things. I just wanted to show you guys this here. Excuse me. Okay, so if you guys can pay attention to the again, you see the gray line is the 3-month treasuries and the blue is the 10-year. The gray line is what the feds are suppressing. The blue line is basically like the bonds market. Okay, so the bond market is up here, and then the feds here. Okay, so you see that the rates here are under 2, and the 10-year rates are under 0.8. So we're still under 1%. We're very, very close to 0. This rate here, you see it failed to hit 0, but it's suppressed. The feds are suppressing this. They're pressing this all the way down to try to keep the economy going, okay? So, you know, this is going to be around for a while with them keeping these interest rates low. But anybody who wanted to follow that, you can pull this chart up on the website, and you can go in there, experiment with it, go back, look at all the data, look at all the securities and what have you. And then, you know, of course, you can share it to your social media feeds. And if you want to know what it's about, to learn more about it, you can go here. You have a description of this as well. But just understand that the feds is using their tools massively, you know, to try to keep this thing bubbling. All right, so let's get to the charts here. All right, so we're looking at the S&P 500, and let's stretch this out a little bit. S&P 500, we got right here at the 100 on the Fibonacci. We see the price popped up here, and it's, you know, basically up against resistance. This resistance level isn't a strong level like this 127 level. So this 127 level is a stronger level. So there's a possibility that we can actually break above that. Let me switch my annotation to yellow. So we could break above this. But the thing is to remember is that where the S&P is at from its previous highs here, we still haven't hit that yet. But of course we would like to get there. And with the help of the Fed, you know, we can get into that zone. But earnings itself, because we're in earnings season again, we're going to learn a lot about these companies, and a lot of them not even providing guidance. So I think that's an interesting thing as well. But the earnings, I don't think the earnings is going to get us there. If it's based off of earnings, we'll fall off a cliff. But everybody knows that the Fed is in to say today, so everybody's playing the Fed's game. So it makes it a dangerous time right now. Basically, what they're saying is to don't bet against the Fed, but the Fed is going to have its day. So we just don't know when that is. But yeah, so again, the stock market is overvalued. You know, it's funny. Somebody was pointing out that it was Dave Ramsey, I believe. Somebody posted a video from Dave Ramsey and was talking about how the markets is never overpriced. And I think that his assessment, Dave Ramsey's assessment, is very limited. Because again, as he mentioned in that episode, Robert Dockery had tagged me in it, so I watched it. What Dave Ramsey mentioned is that he doesn't trade stocks, right? He does mutual funds. So again, you're talking about a guy who doesn't, that's not his thing. He does mutual funds. So, and it was, I guess, this debate about real estate and stocks and what have you. But the stock market yielded over 30% last year by itself, right? And I think Dave was saying how you get 15% from his real estate. Obviously, the stock market can get you much, better returns than real estate. But it's a mute argument because it depends on the times. In a depression time, real estate prices, everything goes down. So the real estate investor loses money. However, stocks, if you deploy stocks, you can make money in any direction, especially if you understand options. And in fact, you can play the real estate game with options. You can lease your stocks out by selling covered calls. And you can generate cash flow just like you would do in real estate without the hassle of owning the property, cleaning and flipping and getting dirty. But again, when you have people who are experts in what they do, but they have limited information, they provide limited, answers, and they could skew the public. But again, you have these intellectuals who's, people look up to. But I just wanted to provide that information. He was saying he said that the stock market is never overvalued because obviously somebody bought it. But I offer a different view because I built financial models. And with financial models, we have a lot of cases. We have a base case, we have a bull case, we have a bear case scenario. And basically what we do is we discount future cash flows. And then we actually price in what the present value of that stock should be. And if the stock price is above that price, then that means that the stock is overvalued. So I just wanted to address that because as stock investors, you're looking to get return from that company, in the future. That's why you put your money there. You put your money where your mouth is. That company's supposed to deliver value in the future. And so you stay in. That's what the game that Warren Buffett plays and everybody else. And so when that is not the case, why would you buy a company that cannot deliver that, right? You have people that's buying bankrupt stocks right now, which is crazy. In fact, we have astronomical amounts of people that open up Robinhood accounts and speculating. In fact, I think Mark brought to my attention, you have all these guys out here selling these stock trading courses like never before. I saw a guy who's like the Dr. Sabi of health stuff, and he's giving stock advice with meal plans. I mean, it's asinine. It's just like any other bubble. It's classic for a bubble that people do that, where everybody gets involved without understanding. And trust me, when the times are good, anybody and their mother can make money, right? But they don't understand how they're making money. And when they lose money, they don't understand why they're losing money. They just got in at the right time when the Fed's pumping this thing up. They're not trading off of fundamentals or even technicals for that aspect. They're just, hey, just buy the stocks. And they're the illusion that they just continue to go up forever. So it works until it doesn't work. And when it doesn't work, people are going to be cursing those people out for giving them these signals or what have you, and they lose all their money. So anyway, just make sure you do your research. Make sure you study. That's why we offer the course, right? So that you can learn, so you don't have to be a dummy. All right. So anyway, I just wanted to touch on that as well. But this is what we have. The ES up against this 100. I think that we can push past that this week. I think we probably get up to this 3,300 level. That is a possibility. The NASDAQ, however, I think that the NASDAQ is taking a breather though. And so we'll see. Now, I wouldn't want to be the one to short the NASDAQ, but ideally you can see right up in here the 20 moving average where the price consistently dips at. Okay, so that 20 is a key floor area that I would like to see for this thing to come down. We can see here with my radiating fire tool, the momentum is shifting down. Even on a squeeze, the momentum is shifting down. The stochastics is shifting down. The trend is shifting down. So the signs are pointing to a breathing position. Again, I don't think we're at a crash level, but I think that we're due for a nice pullback. So 20 would definitely is something very realistic. Ideally, I think that the 50 would be, much better. So again, you don't want to be the one who's buying at these highs, okay? And the FANG stocks are the ones who's been driving all of this, okay? Your Facebooks, your Apple, your Amazon, your Netflix, your Google. And we just saw Netflix get wrecked, all right? So Netflix got wrecked. I think that the rest of them are going to follow suit. But you have companies, in fact, since we're talking about the NASDAQ, let's take a look at Amazon. I know we have a lot of people that's, trading Amazon consistently. Amazon is a big mover, so you got to be careful. Amazon had lots of volatility here. And we got up to the 2618 level because I didn't have any levels. So I had to go out to get the 2618 level here. And that's where it behaved at, where that we got that ceiling, that resistance. And typically you see Amazon trade above its 9 moving average. but now price is under the 9. Okay, so it's a reversal here. And again, we saw the ceiling here. We see momentum is shifting down, momentum shifting down, momentum shifting down, trend is shifting down. So it's time for some breathing activity. So ideally, this should come down here. It may stabilize there. If it doesn't, then you'll see it roll over to the 50. And then again, it could come down here to the 100, but it has earnings coming up. So I don't know if that's going to be a play into earnings going down. But Amazon is better positioned than most of the other stocks. So for that reason, I don't want to be the one to short it. But I just want you to understand where we are. Okay. It's nothing that I want to play to the long side, but I don't want to short it either. So I'm just staying away from it. We'll watch it. So you have, again, Amazon is leading the way. Let's see, Apple. Same thing here with Apple. Again, you had that top right up here and, taking a breather, but it's above its 9. So it's in a better position than Amazon is right now. However, in that overbought territory, it's starting to come down some. And, the trend is coming down some. So we're seeing downward pressure here. Again, it's just these things need to breathe. Okay. These prices are really, really high. All right. So with that being said, let's take a look at the Russell. All right, so I believe that we may get I think we may have some money shift out of the Qs, out of the NASDAQ into the Russell. And the Russell is in a much better position. The prices of this asset is much lower. You saw the NASDAQ is up high at its all-time highs, basically, but the Russell isn't. And if I'm an investor, I want to buy low and I want to sell high. I don't want to buy at the highs. This is the previous high. And the Russell has been able to stay above its 50 moving average here. It's consistently bouncing off of this thing and it's compressing. And so again, that's what we had to squeeze for. And then we had this buy trigger right up here and it slammed into this 200 moving average and is slightly pulling up above that. And so that's what we need to see the Russell to come up above this 200 resistance zone so I can get up here in the 1500 zones. Okay. So we have the trend that's moving up. We got to squeeze this up. Everything else is pointing up. So I believe that, any movement that's moving up, I think that the Russell is in a better position. And I think the NASDAQ, we may see, money flowing out of that into this area here. So the Russell, I believe the Dow is positioned the same as well. All right. So, and again, I think we had the financials. We had the insurance companies that we talked about last week. That were, actually in a better position. So the financials actually were doing their thing with earnings, and we saw that. So we have this play, this pattern here that's pretty consistent in this sector here. And again, you could take a look at those financial companies and see how they're, performing. Ameriprise again is holding that 200 heavy. It's got that, the cup handle, buy trigger right up in here. Okay, you can get a target up above. All right, you got earnings right there. So, companies like that, we have Berkshire Hathaway, pretty similar, almost like a inverse head and shoulders, if you will, actually. Yeah, shoulder, head, shoulder. So it's definitely looking like that setup here. All right. So I think that that's where the money's going to shift into in this area here. Also, let's see how much time we got. Okay. I'm going to take some from you guys here. So y'all get your questions. Your stocks that you want to look at ready, and we'll go ahead and pull those up because I'm trying to get us done and out of here in the next 15 minutes. Taking a look at the sectors, the communication sector is in a better position than everything else, but it is pushing up against this resistance and this overbought territory. So I believe we may chop to the side some more, but some interesting names. I think that it really depends on the earnings of, AT&T, which is also looking, like head and shoulders kind of situation, inverse head and shoulders. Has a squeeze on it. Again, I don't like when they're trading at these under the moving averages. However, we're starting to see it shifting upwards, and it has a squeeze, and that squeeze can uplift it up at least to the 200, which is $34. So you have companies like AT&T that I'll be watching, and they have earnings coming up this week, which I think we talked about that earlier. Also in that sector, we have the Verizon. Excuse me. Verizon up against this 200 moving average again. See, clearly it's not clearing this zone here and it's peaking above that 100. I think it's going to make another run for that zone with a buy trigger right here, clear support right here. All right. So I think those are interesting. What else do we have? I think Lululemon, okay, is also positioned in a much better situation than everybody else. I think they just bought one of those companies, I can't remember. I think it was Peloton, one of those health companies or what have you. But I think it's lots of optimism here. And Lululemon's always been outperforming the rest of those, retail stocks and what have you. But it's got some levels up above here, and I think we can push up into this zone right up here around $350 if this squeeze fires off pretty nice. Okay, we see it can play in that overbought territory for a long ways, and it's not there yet. So I think we can push up into this $350 zone there. All right, cool. So with that being said, let's see what you guys got for me. Ron came through with Bristol Myers. Okay. So with Bristol Myers, let's see, interesting. We had this squeeze, this narrowing of the breadth here. And then we have some prices trying to break out above this 200. And so if we can get the price to break out into that above this zone, which is starting to show signs that that's what it's trying to do, then let's get some levels here, see where we can break out at. All right, it does have some resistance right here. Okay, so we have some, let's see, resistance right up here, the 618. And so I would like to see it clear that. If we can clear that, then ultimately I think that we can get up to about $65, which would be the 100 retracement up here. So 100, I think we could probably clear the 786 and hit that 100 right there. So it's got to break above the 618 for me to really give it interest. And if we do, then I expect it right to hit the 100, which is about $65 target. I don't have the 100 on the chart, but I know it's there. So 100%. CHGG. All right. Okay, so this is an interesting one here. Chegg. I don't think I've ever traded Chegg before. And Chegg is in this upper range. I'll take this high to that low. Let's see if we can get another swing in here. So I'm gonna do two swings in here just so you guys can get some possible targets on this thing. The thing that I don't like about this is that the momentum is shifting downward. So price is going up, which is interesting. It's coming off of this bounce off the 20, right up into resistance. And so, well, if we take a look here, the momentum shifting downward here. Now on the fast stochastics, we see that it's starting to shift up a little bit. So I think maybe we might get into here, but I think that trend is going to come down here. So, I mean, for me, I just don't like it because I'm not seeing momentum and alignment. It's an online student learning platform. So this may be one of those school situations, which is another interesting situation where we talk about technicals. And then we got to look at the story. What we know is happening with school right now. Anybody know what's happening with school? Schools are talking about, doing online learning, kind of like what we do at Wallstreet Jackboyz, right? So don't take Wallstreet Jackboyz light. We've been doing this 3 years ahead of the game, and our new platform makes it even better. But all the other schools are trying to go into that platform to continue education. However, you have Trump and his administration that's against that. They want kids to go back to school. So I think it's a fight with that. And I think that the play on this one would be a very optimistic one. And we don't really know where that's going to go to. but just keep that in mind. That's the story that I think is going to maneuver this stock here. So, if they say kids got to go back to school, boom, there you go. The optimism gets, bled out. But if everybody starts to adopt the online process, this could go up. So I think that's the play in this stock here. And thanks for dropping that, Ron, because I didn't even know what it was. It's an online learning program. All right, cool. So that's good to know. Anybody else got anything else? Let's see. The stock, I believe that this company is perfectly positioned in the current world crisis. Education is going to learn. Okay, so yeah, somebody else is, again, everybody's going to this online learning. And let's pull that, what is that? It's the ASX, okay. All right, here's another one out. I like the Chegg one better than I like this one. Because again, it's up against this resistance zone and it's not holding well. Prices underneath the moving average. We got the trend going downward. Stochastics down, momentum shifting downward. So for me, this thing has to get above this for me to consider it. Otherwise, this would be a short if it breaks up here. And again, it depends on the story, how that story happens. What's the beef with school? Does Trump win? Does, other people win? For this online process, I think we really have to see what that's going to be about. I think he had another one. I think this is the one that you want. I don't understand. OLL. I'm not seeing that. Yeah, I'm not seeing that. Let's see. ABT, Avid. Okay, so Avid Laboratories. Yeah, these biotech type companies are interesting. They are very volatile. I tend to stay away from them. If you trade them on options, you'll understand why. The liquidity on these are crazy. In fact, let me just take a look at the options chain real quick. Okay, so it definitely has, look at all the calls in here. It's very optimistic. We have lots of calls at the $100 target, which is $1 above where it's at right now. Okay, you can see that we have, a lot of activity right here at the $100 target. And then it starts to drift down. But you take a look at the spread between these. The spread is a little wide. And so it definitely, it's got some good volume, but yeah, it's got some good volume in here. And this is all, COVID coronavirus optimism. But I tend to stay away from them because it's hard to get out of these trades. And you can make some good money, don't get me wrong, but just trying to get out of the trades, it gets on my nerves. If you ever been in those trades of these biotech companies, you're up 200% and you're trying to put in your closing order to get out, it's you're going to have to wait because the price is just fluctuating really, really hard and crazy. So I tend to stay away from these, but it's money to be made in there. I just want you to be aware that, you may not be able to realize your entire profits if you can't get out in the time frame that you're trying to target, because of the volatility and the liquidity is normally an issue. So, but it looks a little better today. So we'll see. I'd stay away from these though. They're just crazy. Lawsuits, all kind of stuff really wreck these. SUPN. Yeah. Oh, and to answer your question, I think it was asking, can it go higher? Yes. This can go higher. You got about $110 target in there, where it's in the overbought territory here, but it can go up even higher. Think about, I got a 111 target. That's about 110 market like whole numbers. So it can go there. But I don't buy at these type of extensions though. So I think that, again, your move should have been back here when you got that trigger, rolled it up in here, get out right here at that target. Okay, so let's cover one for Dust. Dustin been having the plays, man. Dustin been having the plays. I've been seeing the setups. Appreciate your contributions, bro. All right, so again, y'all know how I feel about long squeezes. I really hate them. It's a really long squeeze, and they tend to get faked out. So that's why I don't really like them. Trend is up on this, but we got a sell trigger, and that makes it tricky. It is above its moving average, so I like that. I'm just not seeing a trigger for us to enter into a long position. And so I would say that in this here, if you get a pullback back into the 200, that'd probably be a better entry point to get this thing to the long side, as long as the price stays above its moving averages. So it's like it's showing signs of weakness in here. I'm not too sure. I think that is bullish because, again, it's trading above its moving averages, but it's showing signs of weakness, and we had a sell trigger. So if you're already not in there, then I think that you can wait it out and, let it come down a little bit to the 50, at least to the 100, and see how the price behaves. If it starts to show a return and you get a trigger to enter, then I would do that. But it's showing me mixed signals here, right? The trend is up, long squeeze. Y'all know how those do. Sell trigger here today. Wednesday, this could turn into a buy trigger. So I think it needs some more time. It's over here baking. That's when the squeeze is baking. Okay, so Ron, so with the gold, let's take a look at gold real quick, because gold was actually doing awesome. Okay, yeah, thanks. You're welcome, Zay. You're welcome. So here we go. Gold was actually doing its thing. We had some record highs in gold. Here we go. 1829 record highs. Woohoo, woohoo. All right. Your gold investments have been making money. Gold is actually, it hit this resistance right up here. All right. The 1822, and it's been chopping around sideways in here. We had a squeeze that is going into, we got the trend that's coming down. So I'm not seeing this actually on a technical level, which means the immediate turn, going past this zone yet. But what we all know about the real world is that there's still a huge demand for gold, probably more than ever. There's a shortage of the supply. So quite naturally, the price is going to continue to rise. So long term, I'm still expecting this to go higher. We may be at a time where we can get some breathing. Okay. So maybe gold will come down to this 200 or the 50 for some consolidation. Okay. Or just may chop around in the zone here. I'm not seeing it blasting through just yet. But in the same token, the same thing for silver, because last week, your investments really paid off, right? And silver, okay, let's see, we got above this zone here. So silver, we're getting above zones. We got up to that high at silver at 1987, almost $20 on silver. Remember, we've been playing silver way back here. And now look at it. It's going sky high. So again, I believe that these things are going to continue to go high because of the Fed's printing money. In fact, they're getting ready to roll out another stimulus package. You just understand that extra $600 benefit is ending the end of this month. So we got about another week. But they're working, I guess Congress will be back in session this week, and they're going to be, talking about pushing another stimulus. So as they continue to print, I mean, this is going to continue to go. And that's another reason I showed you guys that the yield curves, bonds, there's no yield, there's no interest on those. I mean, it's just, it's crazy. And so the safe haven now is silver and gold, and silver is, especially silver. Silver just it's priced much better than gold, actually. So that's why in the silver, so it's much cheaper. But of course, it's following gold at the same time. But I think that, again, the silver to gold ratio, silver is still a much better position. But I am a buyer of any pullback in this zone here. So if we get a pullback, to me, I'm doing the Birdman hand rub like this, because I'm waiting for that thing to come back at that zone so I can re-up again. And again, we're playing hardcore gold and silver. So you got to make sure you have some physical assets. All right. So that's the whole thing with that. Again, tap those new highs. Maybe we may take a breather here. Just take a look at gold itself. I think we're going to, probably consolidate a little bit, chop around here a tad bit. So keep that in mind. The dollar, as we talked about earlier, the dollar right here. And the dollar's been falling, which is interesting, right? There's, again, we talked about the theories that it should be rising because of demand for it, but we're seeing that the dollar is falling, and I think that's interesting. So again, we can continue to keep our eyes on this. It is in the oversold territory, so it'll be interesting to see if it bounces back. It's been trying to bounce back, but it hasn't had any success. It's got rejected up here at the 50, and it's hovering underneath the 20 and the 9, and so this continues to fall. I think that, again, money coming out of dollar going into gold or even stocks. So gold and stocks have been going up together, which is weird. And as long as the dollar goes down, those will be going up. So we're seeing money moving, trying to, maneuver better. The dollar, as the dollar loses its purchasing value. So if the dollar goes up, stocks will be going down. If the dollar continues to go down, stocks will go up and gold will go up as well. All right. So I think we pretty much covered everything here. Again, make sure that you guys go to wallstreetjackboyz.com if you already haven't. And, again, here's the website here. And, again, create your profile. Registration is free. The courses are not. Again, to have such a beautiful website, we need to have some revenue so we can deliver the best value that's out there. I did want to actually point out to you guys, if you already took the course and you haven't seen new course, the new courses have all been re-recorded. They're all updated. A lot of these stock trading guys that are selling their courses and programs, a lot of these courses are like from way back in 2013, 2014, a lot of outdated stuff. And so with this new platform, I have it in such a way that I can actually update, and I will be updated so that we never get outdated. So all of our information will be top notch updated. But I did want to show you guys the certifications here because you do get certificates when you pass the quizzes and everything. We have quizzes so you can test your knowledge after you get your education. You need a test to make sure that you're actually learning. And so it's not like, a state, or government official one, but it's just for your competency. As a new trader, one of the biggest things I struggled with was trying to make sure that I understood what the hell I was doing. And until I did, I was dependent on the gurus who were selling their courses for $2,500 and monthly memberships of $200 on top. That is a huge investment, spending tens of thousands of dollars to learn stuff. And you don't have to. So what I did is I built in the quizzes, certification. You pass the quizzes, then you have a grasp and a clear understanding of the lessons that you're being taught. So you guys can see, if you take those, you get your certifications and everything like that. So get your certification game up. You feel me? We got that right here on the site. You see what I'm saying? Get your certs up. And what's your badge game looking like? Make sure you get your badge game up too. So you get badges for all kind of things. I got a couple badges up in here. I don't have all of them. I got some of them, but you guys can see you got badge galore out here. Okay, so get your badge galore on, and you can see what your peers are doing. So compete with each other, if you will. You can see who's getting what badges and who got badges that other people don't have. I'll show you guys a couple of these badges. They're really easy to get. Simple things just like logging in, making a comment on your post, on your timeline. You have your own timeline, just like Facebook, passing a quiz, taking tests and things like that. So I see who's working. I see who's working, who's not working. Everybody can see who's working, who's not working. So when people be asking silly questions, you obviously know if they did the lessons, that they did the quizzes, that they took the class, or because some people just buy the class and never take it, and they start asking questions right away. So all of that to say, hey, just take the classes, take the quizzes and everything, and you'll definitely have a better outcome. Also, make sure you guys send invites here. The website facilitates everything. Anybody that you think will benefit from Wall Street Jackboyz, all you got to do is type in their name right here and put in their email. Simple as that. So you no longer have to force people to jump into the groups and stuff like that. You just send it to them, and if they accept it, then they, they'll become members on our website. So just keep that in mind, and it will also keep track of everybody who you sent invites to, and let you know people that actually accepted the invitation and became members of the website. And I haven't figured it out yet, but I will be actually doing something in the future where we'll be giving out some kind of prizes for, anybody that's helping us to grow this community. When I first started, I was one of the instructors at Bullish Bears community. And at the time, I can't remember how many people we had in the community. I was an instructor. And the funny thing is that everybody, including myself, invited thousands of people to build that community. So it was an everybody thing. Most of us were actually pretty new in the industry, but we helped build that community. So it wasn't like one person thing. So I asked the same thing for you guys, is to help us to build our community. Invite your people, man. Okay. It's a little different on Facebook because they were just adding people, saying we don't want people that's not serious. We only want serious people. So I'm not looking for the numbers. I'm looking for quality people quality students that's really going to take this information and really do something with it. Appreciate that, Dustin. Yeah, so I just want to, bring that to your attention. That's on there. any questions, you guys let us know. If you're a member on the website, as soon as you jump in, you can ask questions directly. So with that being said, appreciate you guys' time, and we'll catch up in the markets this week. Peace.